Good afternoon and welcome to Nifty BN. We're tracking corporate earnings today with Neogen Chemicals posting its results for the second quarter of FY26. Looking at the consolidated headline numbers, Neogen demonstrated operational resilience. Revenue climbed 8% year-over-year to 209 crore rupees. Gross profit also rose 16% to 97 crore rupees. And EBITDA was up 13% to 30 crore rupees. However, profit after tax took a significant hit, dropping 69% to just 3 crore rupees, impacted by several ongoing challenges. This bar chart breaks down the Q2 performance. You can see the consolidated revenue at 209 crore rupees versus standalone revenue at 207 crore rupees. The major divergence is in profit, where the standalone entity posted a PAT of 9 crore rupees, while the consolidated PAT, dragged by investments, was only 3 crore rupees. The main challenge was the unavailability of the Dahej Plant following a recent fire. This, combined with high finance costs for the rebuild and increased insurance premiums, heavily impacted profits. EBITDA was also constrained by higher employee costs and conversion costs, and the new Neogen Ionics subsidiary is still in startup mode, affecting the consolidated bottom line. On a positive note, the company's battery materials division, Neogen Ionics, is making strong progress. It has secured PPAP approval from a major Indian Giga-scale customer for long-term electrolyte supply and also received provisional approval from a key international customer for its electrolyte salts. Commercial production is on track for FY27. Strategically, Neogen has announced a significant joint venture with Morita Investment of Japan to produce solid LiPF6 salt, a key battery ingredient. Neogen will hold an 80% stake. The company also strengthened its corporate governance by separating the roles of chairman and managing director. To support these initiatives, the company successfully raised 200 crore rupees through NCDs. This will fund growth projects and provide liquidity for the Dahej Plant rebuild. Management cited remarkable operational resilience and confirmed the rebuild is on track for completion next year. In conclusion, Neogen is focused on volume-driven growth and is leveraging strategic partnerships with MUIS and Morita to solidify its position in the high-growth battery materials value chain. Despite the current headwinds from the Dahej incident, the company remains confident in its robust long-term trajectory. That's the latest from Neogen Chemicals.
Disclaimer: this update is for informational purposes only and is not a recommendation. Please do your own due diligence before making any investment decisions.